Tuesday, October 25th, 2022, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at why the major reason behind the gilt market meltdown, the UK government bond market, was actually a technical default by the UK government in late August, early September. And you might be thinking, what are you talking about? Well, I spoke about it on September 15th, and I hadn't really followed up on it despite the mayhem we've had in the gilt market, and with everyone blaming the mini budget and quasi Kwarteng. I just thought today, wow, no, maybe that's what it was, and we're going to look into that. We're going to look at the UK economy as well, and the fact that it's fallen into a recession, so things are not going to get any better. And we're also going to look at the markets, of course, later on. I just wanted to say that this video today is sponsored by our affiliates in the precious metal space in North America and the UK. And they are ITM Trading in North America. If you want to book a consultation with Lynette Zhang's team, there's a link below in the description. Miles Franklin and Andy Sheckman, the details to get in contact with them are also below in the description. And for my UK viewers, of course, Gold Investments, details in the description. My promo code there is Maneco64. With Miles Franklin, it's Billy, but you can say Mario sent you as well if you send them an email or if you phone them. So back to the UK. Yes, there's been a lot of talk, of course, about what's happened in the UK. We've had a prime minister that has had to resign, shortest serving prime minister, Liz Truss. Basically, the Bank of England sacked the chancellor indirectly. They were holding they're holding on to the billions that they're supposed to do in QE. They announced it at the end of September, and it was supposed to be until the end of October. And they kept doing nothing. The gilt market kept going down, and they're supposed to save the gilt market. And I think eventually when they got the nod from the prime minister that she was going to sack quasi Kwarteng, they accelerated the gilt purchases in the last few days of the so-called period of QE up until October 14th. So yeah, we've all been talking about that, and I've said it myself that one of the main reasons why I think there was a meltdown in the gilt market was that Liz Truss and Kwarteng focused on growth, deregulation, which is not a bad thing, tax cuts, which is not a bad thing, but they couldn't be bothered to say that they're going to cut the size of government, because government spending in the UK is still 52% of GDP, which means that the private sector has been crowded out. And the other thing, if the private sector has been crowded out, how are you going to fund, and I don't like using the word fund, tax cut, but how are you going to fund the government, right? And unfortunately, nowadays, government is a part of the economy, especially when it spends 52% of the economy. It does create jobs. It's not a good situation. I know. I like to see government be tiny, more like 5% spending of GDP, right? But this morning I was just thinking about things, what I was going to talk about. That's what I usually do. And I remembered that video I made, and it was on September 15th, and it was entitled UK Technically Defaults on 500 Billion and shortchanges millions of people, or millions. And what's the 500 billion? Well, it's the UK inflation-linked bonds. Yes, it's 25% of all the public debt issued by the Treasury. It's a huge market, 500 billion. And how do they default on that? Well, here's the story. And I actually didn't think, well, I didn't really cover it right away, but one of the viewers mentioned it, and I thought, well, this is significant. And so here's a story from September 1st. So this happened towards the end of August, and I think people in the know knew that this was going to happen. So it says UK government wins pension fund legal challenge over change to RPI. BT, Ford, and Marks and Spencer pension schemes argue the new CPIH measure would leave pensioners worse off. Yeah, CPIH is just another statistical really malfeasance by the government to try to really cheat you with inflation, because it measures very little of rising prices, and they're using that already, that CPIH. But I want to go through this again, because we know that this gilt collapse caused a major meltdown in the final salary pension market. And this is what it says here in this article from September 1st, way before everything hit the fan. The ruling is significant because 10.5 million people in the UK have private sector final salary pensions, most of which are currently linked to RPI. The pension fund trustees had argued the longer-term impact could be worse for women because statistically they live longer than men. So, yes, we've been told that it was the derivatives, the liability-driven investments, LDI, and the leverage. And that is partly so. But why did it happen? Well, because, in my opinion, it wasn't just BT, Ford, and Marks and Spencer's who thought, wow, this is no good. And what was there to stop also the government changing the way it calculated the normal CPI, not just for the index linked, but to try to manipulate interest rates lower to say that the CPI was a lot lower and bring gilt yields down. And I think this is what spooked investors. This was a technical default. And if you look at the UK 10-year gilt yield, you can see that it started really picking up steam from below 2%. Towards the middle of August, where I would say a lot of people in the know, the people at these pension funds that Ford, BT, and Marks and Spencer's, they knew they were going to lose. And this is when gilt yields actually started going up from around 2%. And they were up already over 3%. And that was even before the mini budget. So I think there's a problem there already. The investors were losing faith and confidence in the UK Treasury and the government. I'm not sure. It says in the article that it was the Office of National Statistics that wanted to do the change, but I'm sure it was much higher up for something so significant. So I'm not sure when this started, when the ONS wanted to change the index-linked situation, but I would venture to say it wasn't under Liz Truss. It was probably more under Boris Johnson or even his predecessor, who was Theresa May. You kind of forget there's so many of them now. But you might say, well, that was just for 2030, but markets and investors, they discount things right away. It gives them a signal, well, here's the UK government technically defaulting on these linkers, they call them, inflation linked. And it's interesting as well because part of the big problem in the gilt market, the Bank of England had to step in as well on October 11th. And it says Bank of England widens gilt purchase operations to include index-linked gilts. They never had done QE on these. So, yes, maybe the mini budget was, as I've said many times, the little snowflake that got the avalanche really going. But I think this also was part of the problem, this ruling by the Supreme Court, by the High Court in the UK. And actually, I think it's done a lot of damage to the credibility of the UK Treasury, unless they reverse this ruling. And that's why I don't think things are going to get better. And we saw yesterday with UK economic data, even the FT is reporting UK economy has fallen into recession, survey suggests. So which survey was that? Well, it was the Purchasing Managers Index. Any number below 50 means that the economy is contracting. So we had the services PMI, and that's very important in the UK because services are 2/3 or more of the economy. We don't have that much more manufacturing. Well, in the previous month, it came out at 50, which was kind of neutral. Economy not contracting, not expanding, just hanging on. And the expectation for yesterday's service PMI was 49.6, and it came out at 47.5. So that's a huge miss. The manufacturing dropped from 48.4 to 45.8 and was expected at 48. So yes, with the UK in a recession, we're going to get now more of the Osborne kind of budgets, which still kept the deficits, the budget deficits. We didn't improve anything. The people who advised George Osborne, and I made a video about that recently, people at BlackRock and JP Morgan, they're advising Jeremy Hunt, who's supposed to stay now as chancellor, and I don't think anything is going to get better. They're going to try to keep rates as low as possible, to keep the City of London, BlackRock, the JP Morgans taking over, and to keep the housing market from imploding, even though I don't think they're going to succeed. And the main reason for that is because government has become so big, 52% of GDP. And George Osborne, back in 2010, was supposed to be bringing in austerity to cut the size of government, but he never did. As you can see here by the deficit spending that he did. He was supposed to balance the books by 2015. Here we are in 2022, almost 2023, and we are running huge deficits. And it's not going to get better because once the economy goes into a recession, less tax receipts, rates are still really high, even though they've come off recently in the last few days. And I think they're going to continue to go higher because prices are going to continue to rise. So the effects of inflation are still going to come through. So that's where we are. And yes, credibility, faith and confidence, that's a really tough thing to have. And I think the UK Treasury has squandered it. The Bank of England has squandered it as well because it's helped the Treasury all these years with the QE. Basically, debt monetization. I mean, it was Sunak. He was chancellor in 2020 who borrowed like 400 billion, and the Bank of England obliged by printing 400 billion. So there we go. Let's look at where the markets are then this morning. It's 8:33 a.m. London time. We've got spot gold at 1646.50. It's down just about $3. The high's been 55. The low is right here as London comes in. We know the LBMA is a huge part of the price manipulation scam, along with the Bank of England. Bank of England holds 5,000 tons of gold. Only 300 tons of those are UK gold reserves, but it uses other countries' gold to keep the manipulation going, and this manipulation helps actually the currency here a little bit, so to speak. But can you imagine? I don't understand why these countries keep their gold with such a corrupt institution like the Bank of England, but maybe they're waking up and taking their gold out. I know that Venezuela tried to, but the UK High Court, which decided on that index link RPI situation, they also said that Venezuela couldn't have its gold. So there you go. That's how, pirates, they are in the City of London and the Bank of England. So spot silver down about 10 cents at 1912. High has been 40 overnight, 1940. Low has been 10, just around here. The Dow futures is down 25. NASDAQ 100 future is basically unchanged. S&P futures down a couple of points. So stock market fairly quiet. The FTSE is down 35. Eurostoxx 50 is up 12. To the currencies, sterling is up about 0.2, just below 113. The euro is unchanged, 98.63. The dollar yen is unchanged at 148.89. It looks like the Bank of Japan intervened again yesterday. Are we going to have to keep an eye on the dollar yen? The Swiss franc, the dollar is up slightly, just above 1. And the yuan, the dollar is up 0.15 at 733. The dollar is up slightly versus the ruble here. It's 61.50 bid at 62. So hanging around that 60, 62 area. To the other currencies, Aussie dollar is up 0.2 at 63.24. The dollar's up slightly versus the loonie, 137.10, and the Kiwi dollar is up 0.2 at 57.05. And now to the general commodities, and there's a couple of interesting developments. Some people noticed that the Dutch TTF nat gas traded negative. I've looked at the ICE exchange website. I haven't seen it trade negative, but maybe it did. It reminds me, of course, of WTI in April 2020. It went negative 37.50 because no one could store it in Cushing, Oklahoma. So they're trying to get rid of it and getting rid of it at minus 37 saved them money because of the storage. And some people are saying that the same thing is happening to the Dutch nat gas futures. But one thing I would say, just look what happened to WTI after that. Well, it went on a 2-year massive bull run, right? Well, anyway, it says here that it's down about 5%, around 95. So I'm not sure where they saw this negative trading, but I probably did. One of the contracts did, one of the particular months, but the front month is at 95. And there's also talk about copper, how all the stored copper in Shanghai is kind of disappearing. And that's very interesting because some people are looking at nickel in the beginning of the year when there's a massive short squeeze on the LME. And now copper, it looks like someone said it's a powder keg. It could explode the price because there's almost no copper left in Shanghai, and that supply of copper in Shanghai was very important for the market. And some people are thinking that it could happen to silver, seeing that a lot of the silver on COMEX, especially the registered supplies, has been drained from there. So we'll have to wait and see, but that's just something to keep an eye on. Copper. WTI crude right now is down about 0.5%, just below 84. Brent crude is down 0.5% as well, 91.10. Copper is down 1% at 339. So the price is still under control. And US nat gas futures is up 1% at 577. To the bond market, the 10-year yield is down about 5 basis points at 418. And we're going to look at the gilt market to see what's going on here today. Okay. We've got the 30-year down 1 basis points at 375. Yes, it's way below 513, which was the recent high. And that's a good thing for now. And the 10 years at 371, down 2 basis points. But don't forget that in August, it was still around 2. So we're still way higher than it was then, even though we've come off here in the last few days. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And with that, I wish you all a great rest of the day. Take care. Bye.